Okay, team. So this is the same trade as before. In this particular scenario, we're going to combine the strategies. In the previous example, I spoke with you about the naked POCs, and you can see here the N30 from here. You can also see the N30 over here. We identify a target here. We identify a target over here, and both those targets work perfectly. So now we're going to use a combination of two strategies. Um, like I spoke about this before. The most important concept here to grasp is the opening range breakout first. So I'm gonna go right ahead and mark these lines here, and this one we're gonna make it. Uh, we're gonna make that one green, and we're gonna make this one red. Well, I should make this one red and this one green for the sake of consistency with support and resistance levels. So we're going to highlight that. Remember, this yellow line here is the entry from that particular naked POC. So let's figure out what could happen if this particular tray was to work as it's supposed to. Okay, so I'm gonna play this back. The entry to this tray is gonna be the breakout of this level, just like I discussed in the opening range strategy. So now this tray here is no longer the tray that we're looking for. We're looking for this tray here. Well, I'm gonna just put this here because I can see that it broke out. I don't know how far it goes, but let's see what we have here on the top. And I don't see much, and sometimes it becomes a little bit challenging when you don't have a lot of stuff above you and you don't have a trade plan to go by. So right now the intermediate target that I have is this one here. Well, the first one is this, but we're not going to aim for that. We're going to aim for this one here, which I know that this one hits just from because of the previous scenario. But we're going to see how far we can go, and I will help you to, well, I will illustrate um, where the stop should be moved as we move up. In this particular index, each point is considered to be one tick, and one tick is $5 in the Dow futures. So let's go ahead and move this back to the open so you can see again the opening range tray, and you can see the naked POC tray as well. So we're gonna play this again and see where it goes. So market opens over here. It makes a high and it makes a low. For the opening range, remember we need to wait until the first 30 minutes. Each quadrant here is 30 minutes. So this is right now it's 10 o'clock, so new candles forming. So we already have a range, and the range is right here. So this trade should go here. So we're looking for a breakout of this level or this level here. It just happens that I already know which ways it's gonna break. So here's the breakout. Remember, we don't necessarily enter with the breakout, we enter with the retest. So the limit order should go here. So there you go. I just bought right there. You can see the P&L moving. technically speaking, my stop loss is here. My target is here. My target should be here. It just hit right there. But we're gonna let it play out. Now I can move my stops and it hit my target. So now let's just pretend that we just move our stop instead of taking our profits here. See how far this trade can go. So this is becoming another entry here based on a strategy, right? If it touches this, I'm gonna buy it right there. So this is the part in which we remove the risk of the trade because it was in profits, and look at that. It just automatically went below it. Okay, this here, if it tests this back again, it didn't take me out. It should have taken me out, but I should have left the stop loss in place. It hit our target here without, well, it technically took me out of break even. It never came back to retest. So I'm gonna close this trade, and if it comes back here, I'll buy it again, right here at 602. Because I'm looking for the next naked POC to be the entry. This one was already touched, so I don't necessarily buy the heights. So, but anyways, you get the point. The point is that the price continued to move up. Here, it took us out of break even, so it didn't actually hurt. We didn't see a loss of points or anything on this particular trade. This becomes an entry now. I wish I could put a limit order here, but for some reason it doesn't let me. Um, we'll see if it gets there. I'll buy it. It doesn't look like it's coming down. But anyways, it just continued to move up. So I'm gonna close this here, and let me say no. I'm just gonna pause it, replay. But you can see basically I had the risk for this particular trade. I had it down here uh, in this area, and it took us out. So that's fine. That's gonna happen, especially in times of volatility. Uh, but you can see that eventually price came back up and went our way. Technically speaking, my stop was a little tight, but let me take a look and see what was I looking. So because I don't have a trade plan, and I want to reinforce the importance of having a trade plan, I don't know where price is gonna go. So I don't know when to get out of my trade. So that's when the concept of one time framing comes handy. But that's something that we're going to discuss, down the line. But for the sake of this particular exercise, I just want to point out the several entries that we had in this particular scenario. One here that was based on the breakout of the level, which is a trade that you should know by now based on the opening range breakout discussion that we had in the beginner's session, and this one based on the POC. So now you see a combination of strategies based on price action, not on any particular indicator. that is giving you opportunities to participate in the market. So very simple concepts, but not easy to execute because obviously you need to have a lot of practice to be able to execute flawlessly and not to be afraid to get into a position uh, when you have done it enough and you can see the results time after time. Thank you. On to our next example. Bye bye.